Hello there guys, this is Crypto and I'm back with another video for you guys. And in this video I'm going to be talking about finance futures trading, how to use leverage, why is it good, why is it bad, what are the risks, what do all these tools mean on the screen, and obviously trying to make it simple for you guys to understand obviously how to use it properly and how to use it with technical analysis and just the gist of everything else. So first of all, what is futures? Well, futures is basically a leveraged futures perpetual system where you use leveraging as a type of way of increasing small capital to make bigger capital. Obviously, that sounds very enticing to traders with not much capital, and then a lot more. Well, the problem is we have a lot of traders that try to use a big chunk of the capital in leverage trading, using too much leverage to try and make too much money, and obviously end up getting wrecked without having no stop losses or end up getting liquidated. So quick example is, say for example you have $500 and you place $250 on a 20 times leverage. So obviously you're using 20 times of the money amplified. Yes, it's good if the trade goes up. You can make a few $100s. But obviously, if you're using too much leverage and you have some kind of pullback that we had recently from all-time high levels and then the 66,000 levels, you can easily get wrecked equally as quick. And basically, what this video is just basically explain to everyone what all these tools mean, how to use them effectively, and just obviously give you guys a better idea. Obviously, what you have on screen. Obviously, I want to say this is again non-financial advice. I'm not a financial advisor. I said always do your own research. This is just me giving my personal opinion, obviously of leverage trading, and obviously none of this should be taken as financial advice. You know, I'm not here for that. I'm a technical analysis trader. That's what I thrive for. Not a signal group, etc. I'm here to demonstrate how to use these tools effectively. So first of all, we have obviously this BTC USDT perpetual chart right in front of me, which is the current price of when trading futures. Obviously, see we've taken this double dip from all-time high levels, retraced back down, and then another one at 66 all the way back down to 58. So let's break it down. Let's break it down from the top. So this is the current price that we have now, 59,780. Then here you have funding and countdown, which is basically the funding rate and the countdown. I think it's every 8 hours when people either in long positions or short positions have to pay funding. So a quick example of what funding is: if you have neutral funding, the market's right in the middle. If negative funding, it favors the longs. And then obviously if you have positive funding, it favors the shorts. So currently we can see funding slowly slightly creeping up 0.10113%. Again, it's not too high. You can also check on the funding rates here at coinglass.com/funding rate, and you can see the funding rate across the market is quite neutral. There's some positive ones, there's some obviously negative, and obviously that's normal, especially with the flush that we had in the market over the last, say, a week or so. Obviously we had inventory stuff started to fall a little bit. You had the liquidation volume around 800 million the other day. So that's the reason why obviously funding rate's quite flat at the moment. And yeah, so I just wanted to show you that, guys, quickly. Then you also have the 24-hour high and low price. Again, nothing to worry about. Here you have the time frames: 15-minute, 1 hour, 4 hour, 1 day, 1 week. You can obviously use this to do technical analysis, but I like to use my own trading view to do the analysis on. Okay, so this is the order book. We have orders and ask and sell orders coming here. Again, nothing to worry about there. That's just orders coming in and out, shows you the size of it, etc. The other stuff I want to talk about that is very important is you have limit and market orders. So obviously what the difference is, on a limit order, you basically set a price that you want to buy into. For example, we can see here 58,383.36 is a good level. So you can also say 58,800 is the price I want to buy. And here it will determine how much of your position you want to enter. You can obviously use this button here to scroll through, give you the position. So 25, 50% of your position, 75 or 100% of your position. Obviously, that's up to you. So make that 0 for now. So the next thing I want to guys show you is a question I get asked all the time. Is the difference between isolated and cross. So obviously, if you're new to leverage trading or futures trading, I always recommend using isolated feature, only because basically only if you, for any strange reason, you get liquidated, in which you shouldn't, the position that you'll lose will be the position that you entered. So if you do $100 and if you get liquidated, you will lose $100, you won't lose any more. So obviously the position is isolated, and obviously this is explained here on Binance. So obviously it's good for you to guys read, and obviously not just take my word for it or what I'm saying. It's obviously good to read in here. And then you have cross, which basically means even if you start to go minus 100% on that position, for example, if you then set a stop loss, and if you wanted to keep the position open, what it will do, it will start taking money from other positions that you have open. And obviously, I would recommend this for people that are more advanced in leverage trading. The only reason is because when we have big pullbacks like we did the other day, for example, if you was longing into 69,000 or 66,000, and you had a cross position open and you didn't want to shut it, you can go minus 200, 300, 400, 500%, etc. And then you start wrecking the rest of your account. And obviously, personal opinion, I like to stick to isolated only because it keeps that position only open for you to trade with and not completely wreck yourself with leverage trading. Again, futures trading, I would say you should only be using anywhere between 1 to 5% of your total capital in it. Again, that's personal opinion, not financial advice, but majority of your trading should be all spot trading. It shouldn't be 100% or 50% futures trading. That's very risky. You can obviously earn a lot of money by doing this, but also you can lose a lot of money by doing this as well. So yes, I recommend isolated position. And then obviously the next most important thing is how much leverage you should be using. For anyone that's new to it, I'll say to use between 1 to 5 leverage, and then play around with it. And obviously 10 times, obviously use the maximum you should be using. Anything above this, when you start using 15, 20, 25, 30, 50, etc., obviously the more leverage that you use, the more your position's impacted. Because what it does is literally the amount of leverage that you see here amplifies the amount that you place initially on your margin balance. For example, if you're using $100 to trade with and you use a 10 times leverage, you're trading with an amount of 1,000 USDT. Obviously, if you start using more capital, for example, if you used 500 USD for one position and you use 10 times leverage, that's a 5,000 USD position. And obviously, yes, it's good that leverage, if you get it correct in a long or short position, is correct. It's nice that it goes up. Also, the money can come back down the same amount of leverage that you use. So bear that in mind when taking big positions or using leverage. A lot of top traders don't use too much leverage. I see the majority using under 10. Anyone that's using 50 or 75 or 100, best believe they're using tiny positions to flaunt on social media, to say, oh, look at me, like I've done 100 times on BTC long, you know, look at that, I've made X amount of 1,000%, etc. Yes, that's nice if you fully confirm the price will go up or will go down. But as I was saying, trading, it's a game of probabilities. You never know where price is going to go. You can only know the ranges that you want to play. No one can predict where price can go, whether it's up, down, sideways, I don't know, left, right, etc. We only play probabilities, hence why you just don't just punt, I don't know, you just don't punt a 20 times leverage on BTC long currently where we are and hope you'll go up or you go down, or whether you're long in or shorting. That's why I always say it's always good to be used in conjunction with technical analysis. This is why technical analysis is so important. Whether if you're someone from one of my free pages or the VIP group or someone that you've been following on YouTube, I always say do your own technical analysis. Don't blindly follow anybody trader, because at the end of the day, it is your money. So whether you gain or lose money is entirely up to you. You cannot blame anyone but yourself. So always bear that in mind. So yeah, so this is the leverage, for example. I like to play 10 and under. I never go into anything above. And it's crazy. One of the main thing is a lot of people that ask me, that new traders always say, oh, do you spot trade or you do leverage trade? I said I made everything I do is majority spot. I like to buy spot trades, whether I'm dollar cost averaging a position or loading up on position on a dip. I like to have spot positions. Leveraging, I do it sometimes when the trade setup is good, but most of the time I probably don't. I just, especially when the market is volatile as it is. The main ways you want to be catching, for example, you want to be using leverage trading, and this is when you become more of an experienced technical analysis trader or trader in general. You want to have a lot of confidence on positions that you're taking, whether it's going to be a short or a long from these lows, because there's no point in doing 100 trades and flopping 95 and only winning 5. I'd rather do 1 or 2 trades, I don't know, every couple of days or couple of weeks, and be good trades rather than doing trades for the sake of it. So what we've covered, so we have covered isolated and the difference between cross, which covers the type of leverages. So a limit order is basically an order that you place on a level that you think is a good level to enter. If you say 58,000 is the level I know, and you want to enter the 50% of your position, and then that will enter you 50% of your position. And then obviously here it does allow you to take a TP and stop loss. You can only do that after, or you can do a market order. So basically the market order, you again enter the position you want to do. So don't know, do 50% or 75% of the position, and that order will be executed at the current price. Again, because it's so volatile this morning, prices moving all over the place. You might get a good price, you might get a bad price, you might be under as soon as you enter the position, or you might just be positive as soon as you enter the position. Again, I wouldn't do it blindly unless you have confluence of the trade that you want to take. Hence why I will show you some technical analysis on the BTC USDT spectral chart. And then obviously we have buy long, which is basically you long here or you sell short the position that you want to sell against. And then obviously down here, once you execute the order, the position will be there. Open orders, orders that have not been executed, normally those will be limit orders. Then you also have here your history, trade history, transaction, and assets. And nothing to worry about. This video is not obviously showing you how to trade on leverages. I'm just trying to show you the basics of the tools that we have in front of me, what they mean, why we use them, etc. And understand obviously the UI of the system of Binance for people that maybe not sure how to use it correctly, etc. So that covered. I don't think there's anything else that I should cover. Yes, the most important thing. So when entering, again, personal opinion, don't take this as financial advice, but it can save you a lot of times. When trading futures, I always recommend having a stop loss. The reason why I say this is because it can save you more times than you lose a bigger amount of money. For example, so on here you have this little calculator here, and this, once you have a position or before you even open a position, you can calculate What's your return on investment? So your P&L, your target price, your liquidation price. These two I've not really gone through these two options yet, but I just want to show you the calculator. So for example, right, let's say, I don't know, let's use right. Damn it, 10. Why is it not doing it? Right, we have a 10 long position here. Say our entry price is 58,000 on BTC, right? And here you can calculate your exit price, so you can be, I don't know, I want to take profit at 66,000, right? And the USDD that you place, the quantity, I don't know, say maybe, again, I don't recommend using, if you have a small capital, start small, build it up. So you say you do $100, right? Now there you calculate how much you will make. If you enter the 58,000 position at 10 times leverage, your exit price 66,000 with 100 USD dollars. Your initial margin will be $58. The P&L will be $80, and your return on investment will be 137. Again, you can do the same here with target price, etc. You can also, I'm pretty sure, the P&L you can also do as, you can do a long position or a short position, depending on the position you're taking. Target price, the same thing as well. Your entry price in USDD, your return on investment. So basically, let's do 60,000 here, for example. I don't know, I want to return 100%. And then basically, target price is 63,000. Obviously, that you can adjust the leverage again. There you go. This just shows you example. If your entry price is 60,000 and you want to take 100%, you're using 10 times leverage, your target price should be 66k to make 100% of your price. Then you have liquidation price. Again, I'll let you guys play with this. It's something you want to play around with. Obviously, me showing you is one thing, and then you playing around. Again, always adjust your leverage to how much leverage you're using. So this is a good tool to use before you enter any positions, to make some calculations. If it's worthwhile, your R&R, your return, your risk and reward on any position that you take. Again, your balance, your quantity, and your entry price. Do we enter long? You can choose either cross or isolated, etc. And the most important thing, and I know they're using interface of Binance have changed recently. It used to be different, where you can enter a TP and stop loss position before you even open the position. So you could enter the trade, put a TP, a take profit, and a stop loss at the same time. But it's changed in recent months. Basically, you can only do that after you've taken the position, which is a bit, I don't know. I don't completely agree with it. So the next most important thing, as soon as you open any position, whether it's a limit or a market order, it's always good to have a stop loss in place. For example, stop loss can save you more times than not putting no stop loss at all, especially when we have big pullbacks in the market. And I can recollect a variety of pullbacks that completely wiped out everyone over the last couple of months, or especially this year in trading. For example, we had a pullback in February, we had a pullback in May, we had a pullback in September, and we have a pullback now in November. And then these big pullbacks, I best believe, these traders that are getting liquidated did not have any stop losses. And I always emphasize of having a stop loss being placed, whether I always say between 3 to 5%, but obviously calculate the risk using the calculator within Binance. I'm pretty sure you can find another one in Google, but use the tools that you have in front of you. Understand your risk to reward ratio, whether your trade is worth going long or whether it's worth going short, and how much money you're going to make versus your targets, etc. Stop losses should always be placed because it prevents you losing bigger chunks of money. For example, I don't know. Well, I read this in a book. It really helped me nail it down, and it's one of the things that when I do any type of trading. For example, if you have, I don't know, $100, right? They always say use 3 to 5% as a stop loss, which basically means if you multiply, I don't know, my maths is all over the place. But if you're taking a 3% hit, it will take you a lot of hits to get to the 100%, right? But if you start using stop losses of 25%, all you need to do is 4 trades that went badly wrong to get completely wiped out of all your capital. Hence why I always recommend 3 to 5% and not playing with too much leverage, because obviously the higher leverage you use, if you again amplify that to 3 to 5%, again that gets amplified to a higher amount, and obviously this can make you lose more money than you ever gain. And that's the enticing thing that I think the problem with futures is. And I always, talk about futures and the dangers of futures trading, because a lot of people that are new in this market, especially this year, a lot of people have been recently getting wrecked using futures trading because they're using too much leverage trading, they're using too much capital, they're overexposing themselves, and they lose a bit of chunk of money, they try to win it back, and when you're trying to do that, it's basically you're losing more money than you're gaining. So again, there's so many different factors that this is why I've tried to hold this conversation on futures trading for this amount of period, because it's a very high requested thing. But you also need to understand the dangers of it. Yes, a few traders on social media make good money, but trust me, that the 5% that win, the 95% are losing, because for someone to be successful on a trade, someone has to lose, and that's just part of the market and how it is. So just to show you quickly, you're using the same chart on TradingView with using BTSD, USDT, perpetual. So this is the same price that we're currently seeing on the futures on Binance. I just want to show you here the chart that I quickly done to see where we are, whether it's worth longing or shorting. We have 2 channels. We have the high here of this range at 61,429. We have the low here at 58,359. So we've established the range. Now we're going to understand the channel that we're in. So we have this channel here between these 2 ranges. We have a mid-range, a top range, and a low range. Currently, we can see price having a clear rejection of this top range here at 61,429, but having some good support with buyers coming in and buying at these lower ranges here at 58,359. Obviously, this area is holding currently as support. Normally, when we see this type of price action, we can see it's a range. So normally it accumulates, and then obviously at one point, it's doing this, it's touching down, coming here, rejecting, it might come up and reject again. Eventually, what we will see is possibly a breakout this range. So we probably might do, I don't know, it's too early to say obviously how this is going to play out. Probably could do this, lose this mid-range, come under here. Everyone will start probably loading up shorts in this position because we lost the bottom of the range. Everyone starts panicking. We're going to 50,000, we're going to 40,000, and then do this and just blast through, or we might possibly get a retest and blast through, or we can just literally continue just chopping for a little bit longer, do this, reject, come back down, support, mid-range, come up. We might do this, yes, let's go long, nope, come back down, retest. So it's too early to say what's going to happen here, because obviously we can see this range developing. Again, this is not a position you want to be taking any longs and shorts in, especially when we're currently at mid-range here, because the market is very undecided whether it's going to go up or down. You have to let the market play out and let the conditions come to you. Obviously, if the support holds here, will be a good long to have a good long here. If this area supports to target mid-range or this target here, or if we come up here and then we have another rejection, you can take a short here, etc. back down to this level, and just play that out like that. But yeah, like I said, I didn't want to make this video too long. I just wanted to explain to you guys the technicalities of leverage trading with technical analysis, obviously what the tools mean. You know, again, it's a very complicated system. It's designed to grab liquidity out of people that are not used to using this type of trading. Hence why I say spot trading is a lot safer, comes with less risk, less panic. You're not opening your phone and your website on your computer, completely checking your position, whether you're making money and so forth. And yeah, so I think that's it really. I can't cover anything else. Obviously, I just try to make it not too long, but obviously quite self-explanatory. So yeah, that's me for the video. I hope you guys enjoyed it, and yeah, let's talk soon. Thank you very much.